Hello everyone, welcome to the Trendline Investor channel. So in today's video, we're going to look at one important concept in the technical analysis world, which will help you identify whether a stock is performing better than your mutual fund you're holding or better than the Nifty performance or better than the benchmark performance. Now, for example, if your mutual fund portfolio is giving you, let's say, a 12% return year on year, but you found a stock which is probably giving much higher returns than the 12%, doesn't it make sense to go and invest in that stock rather than holding a mutual fund? Or does it make sense to at least put a part of your money in that particular stock which is giving much higher returns than the average benchmark or the average mutual fund? So that's what we're going to look at in this video. But before we jump into this video today, I want you to like and subscribe to my channel in case you're here for the first time. And if you've been here for some time already, then don't forget to share this video with your friends. So the concept today that we're going to look at is the relative strength. Now, the word itself tells that it's relative, right? So relative strength means what is the strength of a particular stock or a particular instrument against something else. Now, for example, if your mutual fund is giving you a 12% return and if the stock is giving you 20% return, the stock has a much higher strength relative to the benchmark or to a mutual fund you're holding. So if the stock gave you 20% return and if the benchmark has given you 12% return, you're getting an 8% extra return in terms of the stock itself, right? Now, that's the concept that we're going to look at today. And I'm going to teach you how to do that also in TradingView and how to do that and identify whether a stock is doing well, or you can also put this, compare your portfolio against the average benchmark. It's pretty straightforward. It's a very basic formula that even a 5th standard person or a 8th standard person can do. And that's what we're going to look at today. So let's look at this, and I'm sure you like this video. Stay with me till the end of the video. So I'm going to jump to TradingView, which is my most favorite application in this world because I use TradingView a lot, and it has helped me with a lot of things in terms of trading and investing. So I'm going to take this concept of Symphony itself, right? Or maybe let's take ITC, which is most used or most talked about stock in India, right? Now ITC has been it has been listed since 1995 and it's been having a tremendous run except for the recent last 4 years where it has not given any returns. Now what I want to show you is how do you understand if the stock is doing better or if the benchmark is doing better. So for that I'm going to use a short calculation. I'm just going to hide all this and I'm going to take a notepad and I'm going to show you how to do this, right? So for example, let's take, let's assume two things. One is a stock and one is Nifty. Let's take Nifty. Now let's assume the stock is trading at 100 and Nifty is trading at 1000, right? And we divide this stock price by the Nifty price, you get some number, and I'm going to round that number to 100. Okay, now let's say into 100. Now this would give you a number called 10. Now for every so here you can say that the stock is moving 10 rupees compared to a 1 rupee movement, let's say in the Nifty benchmark. Now let's just take this 10 as an example. Now let's increase the stock price. Now let's say the stock has gone up from 100 to 125. I'm sorry, I'm just going to do this, Control Z. Yeah, stock goes to 125 and now your Nifty is now, let's say, 1100, right? Now if you do this calculation, so here what has happened is the stock has gone up 25%, whereas Nifty has gone up only 10%. Okay, so 100 to 125 is the stock and 100,000 to 1100 is the Nifty. Now here if you do this calculation, you will see a number called 11.36, right? Now it is just a number, right? So for example, now this ratio has gone up from 10 to 11.36. Now the reason for this ratio has gone up is because the stock has gone up 25%, whereas Nifty has gone up only 10%. So when you divide these two, you're getting a number called 11.36, which is higher than the 10 that we had before. Now let's assume now the stock goes much higher. Now let's assume the stock goes to 150, whereas Nifty goes to 1200, right? Now if you divide this number by this, you're going to get a number called 12.5. Now, as and when the stock is outperforming the benchmark, you see that number increases higher and higher. Right now, if you keep it constant, again, if it, let's say after 1 month both are at the same rate, then you see again 12.5, right? Which means both are not moving much. Now let's say from here the stock goes, let's say it increases much further, goes 200, whereas Nifty is just at 1250, right? So now you'll see while the stock has gone up 50 points more, benchmark Nifty has gone up just 50 points. Now that increase in percentage is much higher compared to the past moves in the stock compared to this one. So as a result of that, you will notice that this ratio is now going to jump much higher to 16, right? Now, why has it gone from 12.5 to 16? It's because the stock has moved much higher from 125 to 200 when compared to the Nifty movement itself, right? And that's the reason why we are seeing that number. So now overall, if you see, it's gone up from 10 to 16, right? Now, let's ignore this for now. I'm going to show you this exact same thing I did. I'm going to do that in the stock ITC, right? So I'm going to go back here. I'm going to pull up everything and I'm going to do the same thing that I did. So I'm going to divide ITC by Nifty, right? Now remember, if the stock performs more than the benchmark, then you're going to see an upward trend. So we went from 10 to 11.36 to 12.5 to 16. So that is an upward trend, right? So I'm going to do that same here and show you this upward trend in the rate of strength when a stock is doing well, right? Now remember, I'm going to plot also, ITC down to just show you what ITC has been doing, and then I'm going to show you how the relative strength is also performing, right? So I'm going to plot ITC here and I'm going to get the monthly time frame, right? Now both I have so I have here, so I'm just going to keep this, right? So I'm going to plot everything the same color, right? So it's much easier to understand. So if you see, so this is since listing, right? So whenever you see ITC is going up, this is also going up. But then ITC went sideways, the stock price of ITC went sideways, whereas this relative strength has fallen down. Now that shows that ITC compared to benchmark did not do well, and that's why it has fallen down, right? Whereas here, if you see, this has seen not such a steep move, but whereas here, if you see, it's gone up straight up, right? And then this trend kind of broke down, and then ITC stopped performing, or ITC started underperforming to the benchmark, which means ITC started giving much lesser returns than what actually Nifty gives, right? And that's why you see this fall down. And then if you see, we've had the sideways movement in relative strength, right? Which means ITC has been performing almost similar to the benchmark for all these years. And then if you see again, we had a move up here, right? And that's when, so if you just plot this here and here, so if you see around this time in April 2011 is when, so I'm going to plot a line there so that you notice that point, right? April 2011, right? So that's somewhere here, right? Now, if you see, again, ITC had a breakout here and started, in fact, the breakout happened here, right? And then strength also had a breakout and it started going higher. Again, here, if you see around this point, so the trend kind of broke down. And since October 2013, okay, again, note, since October 2013, the relative strength of Nifty has been in a downtrend. So let's try to find that point here since October 2013. Now, if I'm going to plot the point here, I'm just going to zoom in. So since October 2013, ITC has been going sideways, which means Nifty has been going up while ITC has been going sideways. And that's why you see the relative strength has been falling. So when a stock is going sideways, but Nifty has been going up, then the relative strength will fall because the stock is underperforming Nifty, right? And since then, the relative strength, so ITC has been going sideways all these years, but relative strength has been falling because since 2020 crash or here, that markets went up, whereas ITC went sideways, right? So that's the reason why you see that this has been falling. So now, again, the strength is again picking up here, and we might see that this is again probably heading higher. But for that, we need a few more months, and then we'll see the clear outperformance by ITC in the relative strength. So I'm just going to close, I'm going to come back to the one screen. So I'm just going to show you this again. So ITC compared to Nifty, ITC was doing well compared to the benchmark, and that's why you see a clear uptrend, right? And then ITC started underperforming, and that's why you see a fall, right? And if the underperformance is too much, then you'll see a very steep fall. And if you see since 2013, ITC has been not performing well. So now what should you be doing when you see something like this in a stock? Now, whenever you see that a stock has been breaking out and relative strength also has been breaking out, for example, here we had a breakout in relative strength as well, and then the stock has been performing. So which means you continue to hold the stock until there is outperformance. So until this is heading higher, you continue to hold the stock, and the moment the swing low breaks, which means the performance has been bad compared to the benchmark or compared to a mutual fund, and that's why it's falling down, right? And the same thing happened here, and again the same thing has happened here, right? Right now ITC is breaking out, and probably it's a good time to buy. Also, this is going up, but what I want to see in ITC is a breakout, from this trend line here. So I want to see it breaking out and probably heading above, this point. So if you look at this number, right? So I don't have a number here right now. I'll show you the indicator, but it has to cross this point for it to start performing better, right? So that's the ratio. But there is also an indicator which I'm going to show you today. I have this indicator already written in my custom indicator. I'm going to show you how that's going to perform against ITC, right? So for example, this is the same indicator in comparison against Nifty, and here it's the same chart that I showed you, but it's a line chart, right? So I've just coded that and I'm showing a line chart. So if you see here, we had the strong outperformance here, and then since then it's been underperforming, right? And the green line that you see is the 52-week average of this ratio. So whenever this black line goes above the green line, it means that the stock is outperforming the benchmark, and the stock is outperforming the last 52-week average, right? And then you see this move going higher. Now, what should you do, or how should you invest, right? For example, let's take Symphony, right? Now, Symphony is one of the videos that I posted this weekend, and Symphony, we'll also see how this is performing, and then you can, I'll make you understand how you should be investing also, right? So let's take Symphony. Sorry, my trading views. Yeah, so let's take Symphony. And now I'm going to show you this indicator of resistance strength, right? Now, if you go to here, you see Symphony has been above this average, then it started dropping, right? Now it is going down. Now I usually do it in the weekly charts because monthly is too slow. And here, if you see, this stock has been trending down since that move. It's been going up, going down, and we're seeing a breakout now. Now, if you look at the video again, the breakout is happening. Also, if you see, relative strength also is going higher. Relative strength right now is at 7.85, whereas the past 52-week average of the relative strength was 7.46. So the stock is performing better than the benchmark, and also the relative strength is also higher than the last 1 year average. And that's why I recommend ITC this week, and that's how you find. So once CCI crosses 100, then you also want to know whether the strength is also crossing 100, and then when both crosses 100, and the strength is above the 52-week average, then you go ahead and buy a stock, and you keep a stop loss, and you see where it goes, right? And that's how you should be buying. So that's it from relative strength, and I'm sure it's going to be a little difficult concept to grasp because you might be new to technical analysis, but do watch this video multiple times, and you might understand how this indicator works. Otherwise, I think that's it for today, and it's a pretty complex concept. In case you have any questions, do post them on my YouTube comment section, or tag me on Twitter, DMDSPLY Investor. You will find the Twitter link below, and let me know if you have any questions. Otherwise, I'll leave you here until I see you in another video. Take care, stay safe, and trade safe. Bye-bye.